Hey guys, welcome to Daily Crypto Analysis. So, today what we're going to be talking about is something you often hear a lot about, but a lot of people don't know much about, and that's the Golden Cross. So, what is a Golden Cross? That is when the 50-day moving average crosses the 200-day moving average. So, as you can see, the blue line here represents the 50-day moving average, and the yellow line is our 200-day moving average. And we have a golden cross coming up here within just a few days. So typically what people will tell you that this represents is a strong bull market indicator. And that is true, but to what extent, and is it a short-term indicator, mid-term, long-term? Well, that's what we're going to explore today. So let's go ahead and jump right into that. So what I've done here is I've gone through every golden cross that Bitcoin has undergone in its price history, and dating all the way back to the first one, which occurred in 2012. So you can see back here in 2011 we actually could not have had a golden cross because you require 200 days of price data in order to form a 200-day moving average. So here we are. Bitcoin underwent its very first golden cross on February 9th, 2012. And what I've done here is I've broken the price pattern down into 30, 60, 90, 180, and 365 days. So what has the price action been in those time frames? And you can see that immediately after a golden cross here in 2012, actually for the first 90 days, if you went heavily into Bitcoin hoping, that you're going to get a short-term gain, you were actually down for several months. But, I think this is the key with Bitcoin. We know that time is our friend, and you can see at 180 days, we were up 90%, but if we were able to even hold a year, so February 9th of the next year, we're up 284%. And if we could have held even longer, double or triple that even. And as we know, with if you invested in Bitcoin back in 2012, you're probably doing all right regardless of what the situation was. So at least with this first event here, the first golden cross, while it was not a short-term indicator, what it did indicate to us was that it was setting up the upcoming bull market, and this is when we saw an extraordinary run from the day of the golden cross, a price of about 550 up to about $1,200. Not a bad profit at all. So here we are at our second golden cross that Bitcoin underwent. So this was actually in the the first 6 months following the the peak of the 2013 bull market. So we had a golden cross. This time, however, you can see at the 30, 60, 90, 180, and 1 year time frames, Bitcoin was down. And I think there was a lot of speculation driving the market up at that time. A lot of retail investors getting in, buying in, driving the price up probably faster than could be considered reasonable. And because of that, we saw quite a severe correction all the way down to, at its worst, $160. So almost an 80% correction from its peak. So at this point we hit a golden cross because starting at about the beginning of May, Bitcoin began to consolidate and then had a fairly nice run from 440 all the way up to about close to $700. And because of that, for a very short time, we were able to get a golden cross. Shortly, almost immediately after the Golden Cross, however, though, we went plummeting back down. What happened then, though, was we actually got our second Golden Cross here and around July 15th of 2015. So at that time, Bitcoin had been consolidating down here at around the $225 price range. And we got a Golden Cross, and again, a big capitulation, selling. But with Bitcoin, that's what often leads to the bull market, is people selling off their Bitcoin. Then we had a second Golden Cross shortly thereafter. And now when we break these down, again, the 30-day yielded -7%, -20%, and negative 12% in the 30, 60, and 90-day time frames for the first Golden Cross, which if we go back to our first Golden Cross, again, the first 90 days have yet to be profitable in a Golden Cross for the third, second, and first Golden Cross. But as we can see, once we get to the 6-month mark and the 1-year mark, it becomes very profitable. And if we run that from the second in the series of 2 Golden Crosses, 30 days, 16%, 60-day is 38%, the 90-day was up 27%, and then it really starts to kick off, right? At 180 days, we're at 51%, and then at 365, so 1 year, we're at 124%. Again, these Golden Crosses didn't indicate any sort of, short-term success for Bitcoin, but what it did indicate is that their, sentiment is changing in the market. The short-term price is above the, the longer term price of the 200-day. Now, so you might say, well, what happened here? Why did this one play out where, every single time frame at both, from 30 days all the way up to a year, why was it negative? Well, you have to keep in mind, here we're coming off of just a torrid run with Bitcoin, where we went from, like we said, 550 up to 1200, and we did that in in about a year and a half. So, you can imagine you're probably less apt to believe that this Golden Cross is really telling you much when we just went up, such a significant amount in such a short time. And, once we came down, had a little bit of time to consolidate, then we were able, to come here. Consolidation into the beginning of another bull market. And you can see, if we go from the second Golden Cross, we came from $284 up to our peak at almost $20,000. Again, not bad. And in that time frame, the entire time, our 50-day moving average was above our 200-day moving average. Okay, so we've had a total of 4 Golden Crosses now. 1 was in the first bull run, and then we've had 3 in the second bull run. Although realistically, if we want to go from market bottom, which would be here, following the market cycle peak, we've actually had 2. So then we come here. We've hit our price of 20,000. Then we've come down. The 50-day has moved below the 200-day, and here we are. We have this nice consolidation phase into a big price move up, which sends the 50-day moving average above the 200-day moving average. And we can see here now 40%, 90%, 96, And then we get down here, and unfortunately, we just weren't ready to go up again, because again, we had another huge run up down here from our price of 100 and 160 up to 20,000. So again, we see that the first Golden Cross directly following a massive run up led to in this one we were able to make 100% gains, but at the end of the day, I mean, let's get real. We're talking about crypto here. No one's getting too excited about 100% Bitcoin. I know that sounds ridiculous, but that's unfortunately, or fortunately, that's the way it is. So the Golden Cross did lead to a nice short-term gain in this case, but in the long term, in the case of if you were holding it for a year, you actually would have been down. And that just so happens to be because a year in this situation was putting us sort of during the, it was putting us right at the COVID capitulation mark. So that's why we weren't able to, to experience the, the massive gains. This may have actually been the beginning of a bull market that could have trended, something like into this area, but COVID happened and the markets got scared. So instead of continuing upwards, they trended down. So perhaps this is even an outlier. And then, shortly, here we are, the COVID capitulation event. And right before that, we had another Golden Cross. And you can see it led, you were at minus 44, minus 27, and about even at 90 days. But then again, if you were able to hold for 6 months to a year, you were starting to see nice gains. And here we had as we did in the last time, a second Golden Cross event shortly after the first, and that's when the real gains kicked off. We went from right here was our second Golden Cross at about $9,000 all the way up to $64,000. So that brings us to the question, in the next few days, we'll be coming to another Golden Cross. So what does that mean for the markets? And, I think that's what we're going to find out. If history tells us anything, it's that the Golden Cross is not going to lead to, massive gains in the short term, which is what you're going to see a lot of channels telling you that, oh, Golden Cross, buy now, buy now, buy now, which that's not to say you shouldn't buy now, but you should not buy now with the expectation that you're going to be getting massive gains coming, within the next 30, 60, or 90 days, because as we've demonstrated, 3/1/29 negative, this was the one time where it was the case that you were able to get good gains in the short term, but out of 7 events, 6 of them led you to lower to marginal gains in the short term, in the 3-month time window. So the bottom line is, don't go into a Golden Cross thinking that you're going to be getting massive gains. And you can see what I've done here is I've averaged out the overall Golden Cross average in those time frames. So in the 30-day time frame, you're actually looking at a loss on average. In the 60-day, you are looking at about 6%. 90 days, you're at 12%. 180, you're up to 44%. But if you can hold for an entire year, that's when your gains really start to come. Because what a Golden Cross is telling us is that market sentiment is changing overall. and it's a long-term indicator actually, not a short-term indicator. So, you know, just keep that in mind. Don't buy into the the hopium and whatever else is out there. So stick to your strategy. You know, buy in when you can, DCA in, and hold. Don't go into crypto thinking that you're going to be becoming a millionaire overnight, because that's obviously on average not going to be true. So if you have a good plan and you stick to it, you'll be fine. All right, guys, that's it for this one. So if you like the content, like and subscribe, and I'll see you next time. Thanks.